Good morning, Dolapo.
Hi, Balaji. Good morning.
Welcome to the program.
Thank you for having me.
The uncertainty over the oil benchmark persists, as we've heard, with its agreement between the houses in terms of the lawmakers over whether it should remain at $30 per barrel or $27. What is your view?
I mean, my view hasn't changed really, and I think it's a case of two things really. One is that I think this still shows the fact that we're still a bit so focused on oil, and for me that's a bit of a worrying trend, because now we should be talking about how to explore other sources. What sources can we look at, to boost revenues, rather than talking about how to tweak oil. But then again, this is a positive in the sense that the same legislators are the ones asking to lower the oil price. So I mean, it's a good one. Lower the oil price. I've had 27, I've had 20, I've had 19. I think not too low, because the moment we reduce it, we're critically increasing the budget deficit, if we're not talking about other revenue sources to complement or augment that gap we'll be creating. So it's a case of knowing which of the two devils we prefer. If we lower the oil price benchmark and oil prices rise, say 40, 45, 50 later in the year, and we have that much money going into the excess crude account, which we won't be able to spend, then it's a sacrifice we're making. But if we leave it as it is, and oil prices really rise above 38, we still will have to fill the gap with some borrowing. So, I mean, one school of thought would say leave it as it is, which is where I would stand.
At what price can we say we're being realistic here? Because we're talking about being realistic in terms of what is going on in the international markets. What price do you think
let me give you an
is
idea
realistic at this point?
Let me give you an idea of if you look at what banks around the world have predicted as their average forecast for the year, for 2016. I'm not sure I've seen any bank forecast, even from Goldman, Bank of America, Merrill Lynch, our own forecast here in-house. The lowest I've seen as average crude oil prices for this year is $37 per barrel. Now, what that means is that everybody usually has a low point and a high point. So it tends, for everybody, there's a range of about 20 to 55, 20 to 56, 20 to 60 for some, of where oil prices could range between. But the average for the year is around 38, 37. We have 40, EIA last week released 40 as well. Goldman has 45. So I think all will be here. That's fairly evident. But the issue is, we're willing to we might be hasty making a decision to change them just after 1 month into the year. So I'd say, to be on the risk side, we might leave it as it is.
Okay, Dolapo Oni, they're talking about the energy market. We actually lost him. He was saying that we have to benchmark our budgets based on what is going on in the international market space, and looking at the forecast made by some investment house like Goldman Sachs, saying that oil prices could be as low as $20 per barrel. Okay, Dolapo is back. Let's hear from him. Dolapo, can you hear me?
Yes, I hear you.
Okay, just before we wrap up this conversation, you've talked about the removal of the oil benchmark right now, but let's now move over now to kerosene. The federal government has announced that it has removed the subsidies on kerosene. What's your reaction to that?
I think it's good. It's a good one, because realistically, nobody is paying the 50 naira official price for kerosene. I'm not aware of anybody that cooks or uses kerosene that actually gets to buy it at 50 naira. So the subsidy was in effect really just rent for people that had access to that subsidy, and it wasn't really benefiting the poor man. So it's a good move, saves government money, and ensures that people get to pay what the real value for kerosene is.
Okay, what about the end users of the product itself? Any impacts of this
Unfortunately, there will likely be some impact. There would likely be some impact in the short to medium term, because the fact is, kerosene prices will tend to go up. Even at 50 naira, people were paying 120 and above. Now that it's 83, there will be a significant shift as well too. It might not be as much, but there will be some shift. And the likelihood is even that maybe supply will be more available, because they would ensure that more people bring in kerosene since it's subsidized. and they'll be able to sell at a price that reflects all their costs. So that might actually encourage more supply, which will then keep prices from rising too high. So short to medium term, I expect to be some impact on the low-income households and people that use kerosene. But over time, over the longer period of time, prices will even out, and it should be fairly okay.
Now, just before I let you go, Dolapo, we saw oil price actually climbing to $31 per barrel towards the end of last week. And should we be optimistic that this figure would rise?
I think part of what's pushing the oil price is two things. Number one is the weather. We're seeing a colder than expected start of the year in parts of the world. I mean, America is experiencing a major blizzard, lots of cold. It's also gradually settling into Asia as well. So that's helping to keep prices up. But I don't see how long that will last. The major thing, again, is the fact that, despite the fact that Iran has come back, the sanctions have been lifted, they haven't really started pushing volumes. Shipping companies are still hesitant to carry Iranian crude because they need insurance, they need all sort of papers sorted out, which hasn't been sorted out. So the volumes haven't hit the market, and the market is starting to feel a bit of a tightness. So it's possible that we might see oil prices still go up this week, which is good for our stock market. But as the week progresses and as those issues start to clear out, oil prices will possibly face downward again.
All right, thank you so much, Dolapo, for your time. That'll be all. Dolapo Oni, the head of Energy Research at EcoBank Group. We'll go on a break now, and we'll be right back.